You're now listening to the Open Africa podcast with Laolu, Nosa, and Furo. On this episode of the Open Africa podcast, we have a guest with us. Would you like to introduce yourself?
Hi, my name is KB and I'm an investments and finance professional based in Nigeria.
Awesome. So in this episode, we'll be talking with KB as well as discussing some recent, let's say, incidents, because these are incidents in the industry. So to start us off, I think everybody wants to know or hear our thoughts on Dash.
This episode is sponsored by Dash. Use Dash.
Please
Use Dash for all your finance needs.
Anyway,
this is how an ad will sound. This is how an ad will sound if you sponsor us. I just want to give you a sneak peek so you can buy new mic.
Yeah, the mics have started acting up. Please
help our market. But anyways, moving on swiftly, Dash. So I believe everybody is aware of the recent news around Dash. Dash is a, fintech startup. Founders are Ghanian, just
criminal enterprise.
That raised over $80 million and recently.
Sorry, that figure.
And recently, we've seen stories of them laying off more than 50% of their workforce. And also potentially being in the position to be shut down as a complete business. Thoughts? So
I paid for WeTracker so I could see the full gist.
How much was it?
It was like $9. But I canceled the subscription immediately after. But this is like the first time I've actually paid for something because I just wanted the full gist. Because in that they preview, there was it was juicy. and the part they cut off had some stuff. So basically, Dash, they raised a lot of money, but they raised a lot of money off lies. That's the first one. Is that he lied about his numbers and artificially inflated it. And according to the article, the employees thought he was just exaggerating numbers. Thought the media was exaggerating numbers, but they found out that he was lying. So they too did not know
that he was lying. They just thought that media houses were just yanning.
So
he literally conned everybody at home and away,
including the staff.
Tears.
Point two, they're spending about $500K a month.
An entire company seed.
This is not like on ads or anything. And they were not making any money.
Yeah, the revenue was
zero revenue. Sometimes when people say, "Oh, this company doesn't make money," in my mind I just assume it's loss making. It's not is that they make money but it's not enough. But no, these guys were making zero.
Wait, I'm sorry. I thought there was a product that
there's a product, but they were chopping the cost.
So okay, additional context. Apparently, they have 100K downloads in the App Store, but then really only had 28K users. Now, this is a side note. TechCrunch released an article in February, or earlier, TechCrunch released an article at some point anyways, quoting some numbers, saying that they have over 1 million downloads, they're doing 250 billion in transactions, etc., etc. And I think we've been saying this over and over on this podcast, do these people check anything?
No.
Because if you even checked on the Play Store and the App Store, you will know that they had 100K downloads. How do you jump from 100K to millions?
There's nothing that is impossible for Master Jesus.
How?
You know when people say, and I think Dash is not the first one. I've seen other companies, and I can't remember their names, but usually the excuse is that in Africa they don't really use the App Store, they use Zenda. And they said that most of the people send it by Zenda.
Why are you people criminals?
This is what I've heard.
Why?
I can't remember the company, but the person said, because it was I actually think it came up internally. Someone said, "Oh, how can these guys have 1 million customers when they don't have up to 1 million downloads?" And someone else said, "Oh yeah, they use Zenda. That's how they do it." Just put it out there. Then another thing I've also discovered this year is that people count downloads as users.
Yeah. No, it's not this year. We've been knowing
it, but it's only this year I've actually gotten intimate knowledge of people counting downloads as users. I always thought you counted like the actual accounts as users because that's what I know. But apparently you count downloads as users. Then some people would decide that active user is someone that has now registered, not someone that's transacted, someone that's registered. Then transacting user is someone that's not transacted.
So if you're an investor and you don't ask the right questions, you're on your own. Because you ask them how many users, they say 2 million.
Okay, then the other thing with Dash, apparently they had like a little over 100 people, like employees.
Yeah.
But but most of them were like senior hires. And there were like very few civilians. Most of them were like top hires. And he was literally poaching like high-paying execs.
To come and do what exactly?
To build the Alipay for Africa.
Before we get to that deck, I'll tell you. So there's a strategy, and I think it's a mistake that certain founders make. Is that once they raise a certain amount of money, like I think you get to seed or Series A, you start hiring high-powered people, so you look the part for your next round. Because apparently, certain institutions will now rate you based on when you put your team deck, and it's not like only Dudu people that are there. It's a diverse thing. This is an actual true thing. Yeah. And you see it whenever people want to do something that requires legitimacy, for lack of a better term. So that's when first time we started hiring.
I was going to say butterfly, but
that's why I was like, these guys want to do IPO. So you can always gauge when the company is getting, either they are raising a round or doing something. You start seeing certain hires that are strategic, not for what the people actually bring,
to do the work,
but just the face and the profile they add.
You know,
I did not say anything. Please, Laolu, edit this. Edit that your comment out of this podcast.
No, but many companies in the industry are guilty of this, and it's almost like it's a requirement as when you hit a certain stage. Anyways, adding to all of this, apparently there was a call or something where he was updating investors, and he had given them an update as to how much was in the bank account, but they forced him to log into the bank account, and they found that there was a $25 million gap in terms of what he reported as their balance and what actually is in the balance.
Chai.
So things must have been going very bad for investors to tell you to log in and share your screen. Then there's another 8 million that he used to buy a car
and
buy a house in New York and couple property in Accra. He was the only person that had login to their bank account.
Yeah.
And apparently there are incidents of him moving money directly from the bank account to his own personal account, and there are instances of him using the bank account to pay for things that's for himself. So that's another one. Now, in all this, they also tried to do business. They bought a microfinance bank in Nigeria whose license just got revoked. But it was like a dead microfinance bank, but they paid 10 million US for it. They went to Kenya and bought one company for 8 million for 90%. But it turns out after they sacked the founder, it turns out that it was just 20% that they actually got. There's a Ugandan company that they bought for 4M that didn't really have license.
Then Tanzanian.
And there's a Tanzanian company that they bought for 1M that doesn't exist. So again, there was attempts. I don't even know if this is. I don't know if they're real attempts or if it was diverse or if it was moving forward.
Like, even if you are a fool, after the first fumble, I feel like the next one should be a hit. Like, you can't be 0 for 4. Are you Lukaku? I don't understand. What? How can you attempt to acquire 4 companies and all 4 have issues? It's deliberate at that point now. You can't convince me that.
Yeah, so that's just one of the many things that he's accused of. I mean, I don't want to say allegedly doing because I feel there's enough. See, there's enough evidence.
It's not really alleged.
It's not really alleged at this point.
Because there was first the issue with the Bank of Ghana.
Yes,
the Central Bank of Ghana.
After they announced they did announce a raise, and I think they announced that they were licensed in Ghana or something. and the Central Bank of Ghana sent them like a note, a private. I don't think it was public. I'm not remembering it all, but the Central Bank of Ghana just said, "You guys are not licensed. What are you doing? Like, why are you telling everyone that you're licensed? You're not a licensed entity." And from my own dealings with Central Bank of Ghana, that kind of thing usually tends to annoy them. So I don't think that Ghanaian license was ever going to come out based on that precedent. So it's just a series of very bad dealings, and I know people say things like, "Oh, corporate governance is needed here," but I think
there's no corporate
governance that could have solved
this.
That could have saved what this guy was doing.
That's so for the ill intentions
Like,
of a founder.
So even if he didn't send the money
sole
directly,
signatory founder,
even if he didn't send the money directly, all these failed acquisitions, I'm sure he saw money inside.
Yeah,
because it doesn't make sense. And 10 million for a defunct microfinance bank in Nigeria.
Do you know how much a unit tier 1 MFB license costs? Like, if you wanted to start from scratch, it's under 200M. It's under 100M for the naira. He spent 10 billion naira to acquire an MFB that is defunct. You are nearly halfway there to commercial banking license at 10 billion naira now. Just add 15 on top, and you have your 25 billion share capital requirements.
To do that kind of deal, you're either incompetent or you're a criminal.
That's what I'm saying. Like,
exactly.
It's so bad that I'm just going to assume it was ill intent, that he was a criminal because...
Oh, by the way, I also just want to reiterate that this time around is the Ghanaians doing bad.
Yes.
It's not us.
And just for backstory, he's not in his previous company. His co-founder is the guy that is at Float. I think we gave you context, but now that we're talking about it, just to let you know that this is a Ghanaian company, it's not a Nigerian company.
It's the Ghanaians doing bad this time around. It doesn't happen often, so we need to
celebrate it.
But they're doing it big though. They did it big.
Nigerians, when we were misbehaving 1 million, 2 million, 4 million. The Ghanaians.
Exactly.
So the Ghanaians showed up and are eating $80 million.
Oh, he was also on a 50K a month salary. Now, remember, this is a product without any revenue.
He's a principal engineer at Google.
So,
for a non-revenue generating business. Oh, God.
Yeah.
Don't calculate
That's
it.
600K. That's 600K. So, a year. So, he was
on like 600 million naira a year.
Like, he was eating. Like, this guy was
600 million naira a year.
It's how much was Shegun Abaji earn?
Shegun was on like 400 or something a year.
Yeah. Inclusive or exclusive of that 1% of PBT?
Leave that one.
I think it was like 400 or something.
For context, anyways. I just put that out there for context.
So, yeah, I think there's just a lot. And people are trying to, because I saw someone trying to excuse this as, oh, the investors are not stupid, that something. I would like to go on record. I don't want to say go on record, but I was like, investors too can be stupid because we saw the deck. Mm-hmm. We saw the deck. The guy said he's building the Alipay of Africa. In his competitors slide, he said his competitors are Visa, MasterCard, Paystack, Flutterwave, M-Pesa, and traditional banks.
Wait, banks, card schemes, payment gateways.
If you check his LinkedIn profile, where did I see it again? That he's trying to bridge the gap between mobile money and traditional banks by facilitating cross-border transactions. This is a confused...
Like, the sell was he's connecting mobile money networks across Africa. But if you're connecting mobile money networks across Africa, you're building a platform like an infrastructure play.
Yeah,
not
an
app.
Infrastructure play,
exactly.
Not an app, correct.
So he was building an app, but what he said in pitch deck sounded a lot like an infra play. And people saw this and gave him money. So, again, maybe it's me feeling, maybe I'm the one that's limiting his capacity. But if I saw that deck, I'd have said this guy's full of it.
I'm not sure that there's anybody steeped in like financial services that will look at that deck and not like question it. Like he should have had you at Visa, or you should have caught him at that Visa as my competitor, MasterCard and Visa. But it's mobile money that I'm
Yeah, because
Come on.
like the whole thing was that
on.
his backstory is that he went to Kenya and realized that he couldn't use his Momo from Ghana and Kenya and decided that everything needed to be connected. Okay. Okay. Well, it's again this. Maybe I think these guys have sweet mouth, and like I said, like before we recorded, I said there's really no difference between Yahoo and this kind of investment, because a romance scam is an unsuspecting older woman
You are romancing
on the other
the
side.
investor.
In an investment scam, I feel like it's an unsuspecting investor, because if you tell someone you're trying to Nah, I think when we release this episode, we should share that deck again, because someone posted it.
I need to find
It is a fantastic deck in terms of what it says they want to be. Like, it's so grandiose.
for someone that doesn't understand the market, you bamboozled.
Yeah, like I don't think I've seen anything that grand since that guy was doing passport API. Like, it is it is there.
Yeah, we're never gonna get sponsors.
This sponsor break. This episode is sponsored by Dash. This is what your ad will sound like if you sponsor Open Africa podcast.
Oh God! I think we just need to post you as independent podcasters.
Okay, so how did this happen? Like, what went wrong? How did it go wrong?
What was his history, like his pedigree?
He has been a founder his entire life.
No. I mean, like his professional
I don't understand. I
expertise.
say he has been a founder his entire career.
You can be to be founder is to just raise money and start.
Laolu.
Literally since 2006.
He's been a founder. No, I'm like Furo has his LinkedIn open right now, and he has 4 roles, and all 4 roles are founder and CEO.
He's a career founder. So before he started founding things, nothing.
Nothing.
So he finished from university and decided to start founding things.
Graduated 26. Yes, actually, he started founding even when he was in university. Look now. See, bachelor's degree 2016. He had already founded.
You people,
It was in the middle of founding.
you people deserve anything.
Then he founded a new one while there. Then another one. You see, then they went to YC literally after university, per the timeline. Because he graduated 2016. OMG Digital got into YC 2016.
Does he write code?
He graduated in computer science. I can't answer whether he writes code.
That might explain why. Is this YC?
So he's
thing?
technical founder,
Yeah, he's a technical Repeat founder.
2 times YC.
Yeah.
So all the ingredients were there.
Yeah. That kind of explains it now.
If it was a Stanford dropout, that would have sealed.
Like,
Killed it. First round would have been 100 million. Maybe talking 80 million.
Because I remember when this thing dropped, right? And when he raised, I think 30 something, and it was outside PalmPay. It's been the highest African. In fact, I don't think you should count PalmPay. PalmPay is a Chinese company. So it has been the highest African pre-seed, or is it seed? For the round, they raised that 32.
he did 32M seed.
Yes, he has been the highest seed for an African company. And when it came out, obviously, my guys were like, Nosa, what's going on? Are we behind? Like, where did these guys just come from? So me too, I downloaded the app. I was like, and the app is very slick. Like, it was very snazzy. Plenty of people have tried to copy Revolut before, but they actually got a lot of the interactions right. So if you even use the app, it would have been washed as well. So I guess maybe he had the packaging right, he had the finish right,
And
he
there
had
were
the
pitches to investors that are not based in Nigeria, so you can't really do any transactions to actually test it.
So they're just seeing your interface and like, this guy has it. Now, for my understanding back then, it was big in crypto community because it was the way you could do P2P trades with like people in Kenya and Uganda and whatnot.
Crypto.
And even in fact, that cross-border African P2P trade thing is also, it leads to even cheaper cash, right? Cheaper cash comes in here because cheaper cash had crypto open in Uganda or something, but not open in Nigeria. You know, Nigerians are very big on crypto. So there was lots of trade between countries, and I think you could do like arbitrage because I think cheaper was cheaper than Binance, and you could buy from cheaper, move it to Binance. So there was that whole thing. And it was in that period where I started seeing Dash app as a thing. but it never became mainstream enough for it to say these are the volumes that we are doing. Because if someone is saying I'm doing this volumes and Nigeria is one of my markets, there are a couple of things that I would say this is like easy, lazy due diligence. Search for them on Twitter. If you can see customers complaining at scale, you know that these guys have real customers. If you have access to interbank NIP, the bank that they are using for collections, do you see any spike in transactions to them? Then you can say, okay, people are actually like depositing and moving money. Asking Uber and delivery guys what apps they are using to collect their money. Can tell. Like when it was Kuda, you could tell because that's what you just started seeing it on road. When Palmpay and OPay came, you started seeing it. Even MoneyPoint, when MoneyPoint came, you just started seeing MoneyPoint. So that's how you can terminals. So you can tell when someone has real momentum.
You have to see.
Dash never had that.
Yeah.
Like I never saw it outside of crypto people.
Sorry to drag these other guys inside here cheaper as well.
Same thing, like exactly with them. Like
same boat.
It's a very niche thing. So when someone says Nigeria is their biggest market and you're not seeing them,
you are not on the streets.
You're not seeing them on the streets. Like I'm not.
It's like OPay now. If OPay tells you, "Oh, we're big in Nigeria," the evidence is there.
Clear.
No
like you are not questioning anything.
Because if you enter an Uber and you're doing a transfer, these guys are always on the newest, fastest thing. Oh, these guys don't do charges. Oh, these guys their alert is fast. So they are always like forefront of trends. So whichever they are using, you can say, okay, yes, these guys are actually making inroads in this market. But these guys never really had that. Mm-hmm. Then even when they start, because I joined all these Telegram groups, they had all these like fraud Telegram groups for context. they used to have all these arbitrage scams, like maybe their exchange rate for NGN to franc is not really aligning with real life, so they'll be people will be round tripping money for like arbitrage. They find out, then they'll block they'll freeze deposits for everybody. Because there was an incident where people just couldn't withdraw from Dash for a while in my scam Telegram groups. Don't laugh. This is how I get market intelligence.
I need you to add me. I was about to say, I beg, add me.
So they always had all these technical issues and everything that suggested that nothing was rosy compared to what was coming.
This app is really snazzy, Sha. You are right.
Actually, I think they finished working it. Like,
I beg, do you still have it? I need like real screenshots. They are not sending me OTP anymore. I'm trying to create accounts. It's not working.
And you know the funny thing, like after looking at the deck and someone that used the app, these guys are talking about want to replace Alipay and Co. The next feature that was going to come out was USD virtual card.
I think it's just a good point to note that we've said this over and over on this podcast that as an investor coming into the market, you have to work with people that have local insights because this is a clear case of...
No, but maybe we're the ones deep in it because for an investor whose fund is, I don't know, maybe $1.5 billion and what he has inside Dash is like $2 million. Like, yeah, he's pressed, but he's not really pressed like that. Like, do you get? At least I want to believe like that's why you would have DD failure to this extent. This guy has been a career founder.
He's a career salesman.
Bruh. The last company before this, was it not like entertainment? Like
OMG
media.
The one before that was OMG Digital. And then before that,
and then he wants to do financial services. I mean, I've said it. I think I said it on the last episode. If you're going to do financial services and you have no financial services pedigree, I can't take you seriously. Like, you at least even understand some things. And I'll keep going back to this example of someone running a card business, but not knowing what chargeback fraud is. Like, this is fundamentals we're talking about. Now, it's like doing an investment management app, but you know nothing about investments, and then you are relying entirely on discovery, product discovery, building in public to be figuring things out. Like, it doesn't work that way, especially when you are dealing with money belonging to real people. In any case, he's lucky, Sha, because if it was Nigerian investors that gave him that money and this thing happened in Nigeria, EFCC will have carried him by
You
now.
know, as you just said this thing, I downloaded Dash again. I still have money inside.
Please, can you send me screenshots? I
Dollars.
beg.
Not even Naira. Is it Naira?
It's Naira.
Okay, it's
I
Naira.
beg, just
54 naira,
screenshots of the thing.
I'll never get this money back.
It's okay.
How much?
54 naira.
Anyways, I think we spent enough time. How much?
Don't worry, just go.
Okay, I think we've spent enough time on Dash. There are lessons to be learned.
Sorry.
Yeah.
I'm sorry. But before there's also the Patricia thing that we never really talked about. Cause it's kind of like the same WhatsApp group, maybe not the exact same play, but just the same
Similar
thing
WhatsApp
where
group.
somebody's original business is a clear
Questionable.
money laundering red flag.
Man,
Furo, you cannot be
I
selling.
cannot speak on this one. I'll leave this alone.
You can't be selling.
I don't want to be.
You
I don't
can't
want
be
to
selling
disappear
gift
in the middle of
card.
the night.
Omo, if disappearing is the price it will pay, then so be it. Because how can you be selling gift card?
You know, Yahoo and Colt is very close.
I live in Ikoyi. They should come and find me. I'll post my address.
Who's that?
So that Mopo at the gates will not let them enter. Please. But yeah, just you wake up one day, you take customers' funds, no recourse to anybody. You say you are tokenizing it. I don't know, man. I don't know.
Again, we ask about the pedigree of the founder, but I think very early on, when we spoke about Patricia, people thought we were just haters. A lot of I know I personally got a lot of feedback just saying that we were just haters for pointing out things like with regards to Patricia.
You know, I even sometimes I try to have like balanced views, because I feel like when it comes to startups, it's easy to be cynical. You don't need any deep insights to say, oh, these guys are going to fail. 9 out of 10 times, like, they're not really going anywhere. But in the same vein, when something does not make any sense whatsoever, I'm not going to hesitate to say that, yeah, this thing doesn't add up. Selling gift card.
Anyways, moving on to a more educational segment of the podcast.
Since we're talking about investing
Yes.
and raising
scams.
funds,
Yes. We're now going to talk about raising funds locally in the Nigerian market. And that's why we have KB on the podcast today. So,
Furo is so excited.
please, I'm tired of bad news. Let's talk about helpful things. So, KB, in your experience, what's the picture? What's the fundraising landscape for like businesses in Nigeria?
So in terms of fundraising, I think I'll just focus primarily for companies within the country looking to raise maybe Naira or dollar. You look at it in two broad angles. So there's the private market and then there's the public market. Because startups are, where they are in terms of evolution and size, a lot of activity really goes on in the private markets now. And in the private markets, I would say we have maybe 3-4 broad buckets in terms of investors or people you engage for fundraising. So first, I would say sort of the HNI family office bucket. So I'd say that's the largest.
We have family office in Nigeria.
Yeah,
Yes.
there are quite a few actually.
Somebody was arguing that we don't have plenty on the timeline now. Which day was that? But
A lot of
sorry.
them are super private. You never even know.
Please go ahead. This is
Second, that-
I feel like
fascinating.
these are people that have robbed Nigeria. They have to be private by design.
Second are sort of the institutional guys, and by institutional, we're talking more, asset managers, fund managers within the country, pension funds, and then you have some debt-focused funds. Some of them are more offshore, where they have the mandate to sort of give USD debt to companies operating in emerging markets, and there's also like the impact guys who also have a mandate to sort of give USD debt to companies operating in emerging markets. The final bucket, I would say, which I'll say it's probably the smallest, just because of the terms of the transactions, would be banks. As you can imagine, raising debt or raising loans from Nigerian banks isn't straightforward. And with the new CBN policy, which sort of stops the use of USD as collateral to draw that on Naira, that's put some pressure on the ability of companies to sort of raise Naira from that angle. So that's sort of it from the private terms of things. The other bucket is really the public, which is relatively new for startups because of the terms to raise from the public markets. And the options companies have in the public markets are, raise a commercial paper, which is really just short-term lending, less than a year from institutional guys. And then also more long-term, there's the bonds. But we haven't really seen any startups of touch the bond market. We've seen a few touch the commercial paper market. And it's one that is growing currently.
I feel like Max did something. Max, was it commercial paper or bond?
No, I would say most likely.
Didn't they have debt inside that they own too?
I have to find it. Because I remember I saw it and I thought it was like a couple years ago. And I was like, this is a very interesting approach. Because usually that's the kind of stuff VFD can do.
Yeah. What I find interesting, or maybe the question that I should be asking is like, what is the...
Sorry, before you go ahead, actually, Max was a bond.
Yeah, it was a bond. 10 billion Naira bond.
How long ago was that?
2020.
2020. So
I guess my own question is like, if you're looking to like raise capital, what should you be considering, and why is a commercial paper an option? Because my graduate training school experience sort of positions CPs as a corporate Nigeria.
Yeah, it sounds
type
like
of
something
thing.
that every school does.
Who will give every school? I apologize, I apologize. Please, we're not talking about that company. Yeah, I apologize. I didn't mean it. Please.
So when you say what should you be considering? What do you sort of mean?
Like, so I mean, there are all of these options, right? You're a company, maybe the VC route isn't really what you want to explore, so you start looking at other options, and then
raise VC money. I don't want to bring it into Nigeria.
Which is primarily the case for most people.
Yeah, you don't want to bring it into Nigeria. You're looking for local options that can sort of like help you, get going. Why is a commercial paper an option, or why is a bond an option?
Actually, before we even go that far, like, which one would you like? What's the private or public? Like,
I would say long term, public is always best because public is cheaper. But to be able to raise public, you need to have met certain milestones as a company for public companies to be comfortable to lend to you. While the private guys are more willing to take, I won't call it a risk, but because, they're, again, it's private. You're not a custodian of public funds necessarily. So they're more willing to engage and, figure out different structures. But public is a lot stricter. Yeah. Public is a lot stricter because you have got, regulated by CP markets, regulated by FMDQ, which is, based on the mandate they have from CBN, and the bond market is SEC. So regulation-wise, it's extremely stricter. There's a lot of oversight there. But the benefit there is, in terms of cost of funds, that's probably the cheapest you get.
This is deep. It's deep.
So you mentioned milestones for public. Like, what type of milestones do you need to like hit as a company if you want to go public? Like, examples.
So years of operation. So minimum years of operation, 3 years. Profitability. It's a very, very, very key thing, and as you can imagine,
KB.
Yeah.
That profitability, we're going to have a problem there.
Exactly. And the final one is also important, is also credit rating. So you need to have an investment grade credit rating, usually 2 from recognized ratings agencies within the country.
So like, Fitch or like Augusto and Co.
Augusto, GCR, Data Pro, those sort of guys. So you need to have an investment grade credit rating, because the people you expect to invest in that commercial paper, they already have mandates in-house where they can only lend to to a company that has investment grade credit ratings.
So what's the process like? So like how, I don't know, like what's the process of like pitching? Because from my experience, like pitching to like VCs basically is like begging.
Snazzy deck.
It's like a snazzy deck, firing emails, scheduling calls, and you can just like yarn them. If they really want to get deeper, you can show them how the thing works.
Then you go to your data room.
Just give them like a data room, etc. Is it like similar for if you're going like the public route?
So for the public crowd, I'd say there are two. Number one, you even have to convince the regulators for them to sign off and say they are okay with you engaging public investors. So that's even like probably the most important step. So there's a process of preparing documentation. So typically you would work with lawyers and investment bankers and, your accountants and trustees and all those people. You're working to present your company to the regulators to show them, operations, quality of management, in-house policies, just showing that you're a serious company, right? The regulator will then assess your application and say, it's okay, we're fine with you, we approve for you to have, for example, a commercial paper program, which is usually for 3 years. So depending on the size, let's say you're approved to raise 5 billion, meaning you can engage the markets at any time within that 3-year period to raise up to 5 billion. So the really key, most important step is really getting sign-off from the regulator, because the regulator is really, they are the guys that protect the markets and the market participants. So once you do that, then it's now really just engaging the market participants, and not necessarily in the equity sort of area where there's, the DDs, really just a lot of meetings and one-on-one conversations, and there are lots of questions. And as you can imagine, the average Nigerian investor is very conservative, and even more conservative because of a lot of the things happening in the market or that have happened in the markets in the last few years. So there's a lot of deep questioning into really just them trusting the management, the quality of the management, trusting your financials, and really trusting that you know what you are doing from the point of view of you understand the risk within your business. Nobody's saying there are no risks within your business, but you are actively doing things consistently to ensure that you react to risk and you're sort of aware of the things you need to do to constantly improve performance. So really just selling the story. So you have to have, in dealing with them, you really have to have deep, proper understanding of your business and your operating environment to be able to sell the story to investors, to get them very comfortable to lend money to you.
A quick question there is, so can you give some examples of market participants for like a commercial paper?
For a commercial paper, you can think of your top pension funds, ARM pensions, Stanbic pensions, asset managers from ARM Asset Management, Stanbic Asset Management. So those sort of top guys, UCAP, UBA, those sort of people.
Sorry, it has been boring to say it for like 5 minutes now, but I kind of feel like a layman hearing this will get the sense that anybody you see in that market is sort of like trustworthy to make it past like the DD. But is that really the case? Can you finesse your way in a way that's, and obviously I know that you are not recommending this, but is it something that has happened before where participants in that market are kind of,
we can see like dash finesse investors. Can you dash finesse like FMT?
Yeah,
so
correct.
I'll say it would be very difficult to, not saying that it doesn't happen, but when you even look at, if you were to gauge in terms of the percentage of quality participants in the market, to be very, very high. So it's not impossible for a company to finesse to the point where they're not very open or don't present the depths of the company. But with the way regulation is in Nigeria, it's actually very difficult. Regulators are actually quite serious in terms of, because they don't play. They don't play with their processes and how they. So it's not impossible, but I would say it's going to be very difficult for you to go through that process, because even if you were to go through regulators, the investors who have big money already have. You can imagine the process for a Stanbic to approve to invest to you. They're not going to. They've seen enough in their time operating in the markets where, even if, for example, for those sort of big guys where if regulation says one investment grade rating is enough, internally they might say, we're not giving to you if you don't have 2 investment grade ratings. We're not giving to you if you don't have on top of even what the minimum requirement is from the regulator. So it will be very difficult.
So you meet like you have to like meet with all these like different one-on-ones with different stakeholders. So
Yeah,
like,
if
you
you're
meet with,
serious.
like a Stanbic,
Yeah.
you meet like an ARM.
Yeah, if you're serious, for the big guys, you give them that respect of meeting them one-on-one. You can do group meetings for maybe, I don't want to call them small, but I guess maybe the smaller in terms of size of the funds they manage. But for the big people, you give them that respect of meeting them one-on-one.
So a company, because you mentioned something earlier about not wanting to bring dollars in, like if you raise. So like, how does that work? So if you raise from like a foreign VC now, maybe you raise like 10M, but you don't want to bring that 10M. So like, what's the reasoning behind that?
Key thing, as you can imagine, with what we've experienced in Nigeria by the last few years, is FX risk. You are opening yourself.
What's the reason?
Yeah,
I just want to know.
yeah, it's really just FX risk. Yeah, just opening yourself up to too much uncertainty outside of even just your day-to-day operations by bringing money in where you have no control as to one, ability to even take the funds out and what rate you're taking the funds out at. So yeah, before this new CBN policy, where lots of guys did is, as I mentioned earlier, you maintain your years, you use it as collateral to draw down on some naira locally, so you protect yourself from that risk.
Okay. Because CCI is not enough to help you get your money out.
Yeah.
Even airlines are running away from us because they can't get money out.
Yeah. It's an interesting point because I think one of the things I've really been thinking deeply about in the last few months is it's interesting how you have startups or companies operating who have, the serious guys or the guys that are not doing funny things who have raised funds from global VCs. So meaning that they've shown ability to, these guys are serious, they have plans, their plans to grow, operations are solid, but it's more difficult to even raise naira locally
than raising from
global VCs. And just from a classic or academic corporate finance perspective, debt should be less risky and cheaper than equity, right? Because, but yeah, it's an interesting thing which there's a lot of work to really solve for that problem in Nigeria.
Because this is not something that like many Nigerian startups do, despite the fact that most of them raise VC funding internationally.
Yeah, it's difficult.
It's quite difficult because even if you talk
they ask questions, hefty questions, with deep contextual understanding of the market that you're operating.
Exactly.
It's hard to Google. It's like trying to do a fintech play.
Yeah.
And then you are going to meet bankers to give you money. Like they understand the model.
They've seen numerous cycles.
Yeah,
they've been through it all.
Yeah.
In my past life, I was a founder and we were talking to like local investors. And one of them was like, he wasn't even putting that much money. Like the foreign investors we had that put significantly more money. But this man was like, look, as I'm giving you my money, I'm giving you CFO. Like somebody has to be there to protect my interest. I can't just give you my money and unlook. Because I think that, like KB mentioned, like investors, individuals, institutional are just significantly more risk averse and will not be easily bamboozled because I think things are hard here. So to make 1 naira, the hustle and the struggle. There's no free money, like just unless you're in government shopping. There's no money is not just flying around and it's not easy for you to just cut deals and make money every day. So then for every naira that you have, you kind of have to be very intentional about how you apply it.
Actually, as soon as you just mentioned that government thing, I just remember, that guy that put money inside a flat in Bordelon, in Ikoisha. Now, what if that guy invested that money in a startup? Invested money in a startup, and essentially they laundered the money for him.
They bought NFB license.
They laundered the money for him, and essentially gave them money, and they used it to lend, and they lended to him. I think we have low quality crime in Nigeria. I feel like this is good crime
because things are hard here, my dear. Moving on, so we're talking about public sector quite a bit, right? So let's talk about private. So who are the players in the private space, and sort of talk us through that landscape.
So in the private space, I mean that's really where
you see that family office. Me, I'm very invested because
But this guy has a family office now. Tunde Folawe.
yeah, most to be honest, when
Most of the rich
most like leaders of industry in Nigeria tend to have family offices.
Ah, you're so cool. See the way you said leaders of if you were that's what we say captains of industry.
No, because I know like Dangote has one, and it was like a thing where Dangote was investing in like UK real estate and not Nigeria, and it was I think it was on the news. Oh, that Dangote and the fund manager was like, oh, we're trying to diversify and de-risk Nigeria. And in my mind, I was like, if Dangote thinks we are finished,
We're really finished.
we're really finished.
Yeah, but those like home offices, right? How would that work now in like an investment capital raise type of way? Like you just reach out, schedule call, do you beg like VC or is there like a process to it?
Yeah, so similar. So I'll say it's actually similar to the public, but obviously not. So you're still working with like your legal team. So there are two options there. So you're either going to just structure a bilateral arrangement one-on-one with the investor, or you almost do a private version of a public instrument where it's a similar structure, but obviously by law, private structure is not announced to the public. You're only admitting sort of qualified institutional investors who you expect to understand the risk involved and understand the markets and the company and that sort of thing. So there's, you're drafting the same legal documents, drafting a prospectus, that sort of thing, and you work through that process.
Oh, so wait, because you mentioned something about qualified investors. Because I know in America there's a thing where it's not everybody that can invest in a startup. You have to be, I've forgotten what they call it.
Yeah.
We have something similar. In
Yeah,
Nigeria
we do actually. Yeah. In
Interesting.
terms of, there are a few things. I think your assets, your net worth, years of investment, there's something like that. I need to double check, but I know on the FMDQ website or SEC, one or both, they have a clear definition for what is a qualified institutional investor.
Interesting.
Yeah. So from there, really, that's really where a lot of companies or startups in Nigeria raise from, the private market. So there's the HNIs, so individuals who have, they're liquid. And I guess the good thing with the HNIs and family offices is that those are people who probably would give equity to a startup. So they tend to be more comfortable to give debt because they have narrow liquidity and they're willing to take the time to understand the company and take that risk to give debt. And some institutional guys also play in the private market. So not pension funds, obviously because of their mandate, but a few asset managers who have mandates to, broader mandates and can invest in those sort of companies. And so, so it is HNIs, family offices, institutional, and the final bucket really is global sort of debt funds. So you have, but that tends to be in USD. So you have some funds operating outside the country who have mandates to give debt to companies operating in emerging markets. And so those are some of the buckets.
When they give you that kind of mandate, are they expecting to collect their money back?
And they'll collect now. And they could, and they price accordingly to ensure that they protect themselves. So
So if I was a founder and I wanted to start this process, where do I begin? If I wanted to start considering my options, or like, where do I begin? Do I just call KB? Or,
Do you do consulting?
And can we get a commission for reselling you?
Yeah, I
This is
mean,
our first ad.
yeah, we can do that. But I'll say first things first, just get yourself in order in-house. The last thing you want to do is to engage investors if you don't have a clear story you're telling about your company, the strengths, the risks you face, how you react to things. You just need to show you're a serious person. It's extremely important because you don't want to put a foot forward that is not your strongest when engaging investors in Nigeria. And I would say from experience, the best place to start is from the HNI family office angle, the private markets. That's really where you need to hone into, because those are people who tend to understand the space which startups play in and are willing to take a bet on startups from very early stages.
but still, you have to know your stuff.
You have to be able to tell a clear coherent story.
I'm guessing these guys like one like proper business plan, not like fancy slide.
No, they
target market.
They're not going to take, because again, as you've said, these are people that operate in Nigeria.
If only
they've
some
seen multiple
people had
cycles.
requested for proper business plan. If
Exactly.
only.
And that's why, like, as investors,
Maybe they will not have dashed that money away.
Yeah. Yeah, because when you hear stories like, situations of people dashing money away, as you said, you ask yourself, what sort of questions were the investors asking these companies during the due diligence phase? But,
Because they went through due diligence.
yeah, it makes you wonder what sort of questions they were being asked, but, it's part of it.
There's some investors that do psych evaluations, like when they want to give you money.
Really?
Yeah. That they will have they'll have someone talk to you as part of the DD process to see
I get
if
why.
this guy is mentally okay enough
Yeah.
to not take the money. There are some that even mandate mopo when they give you money to protect the asset.
Interesting.
That you're working in an emerging market and we're giving you all this money, so you need to have security.
Huh.
So you have that. I mean, because you don't really see a lot. To be fair, a lot of these stories that we've seen are it's a certain kind of investor that's
And a certain kind of founder.
and it's a certain kind of founder. It's like they just know where they meet themselves. But with like the very serious guys, like all those Sequoia and co, they do like psych eval to see if maybe if there's Ole in your family.
I'm sorry. Did you just say psych eval?
Yeah.
Like they'll give you MMPI to fill?
No. There'll be someone to talk to you
Ah.
that does like a profiling, like all these like FBI types where they talk to you and say this guy is not stable. So it gets very intense at like the very highest levels. But when it's like, I don't know, again, they have it where they find themselves.
MMPI is like a clinical personality test. Sorry, I just realized I said something without context.
That's very interesting. I think that. So is it that we don't see a lot of founders raising locally because they do tell stories?
Yeah.
Or-
Yes. Let's not lie to ourselves.
I think is now that I guess like I have a better understanding, it's not too far away from banks lending, like this mentality and the approach, like banks lending to
it's detailed, it's thorough,
and is the reason why there's a lot of SMEs can't really get
access bank
loans
financing.
because-
Yeah, but I guess the issue with banks is, you question how much banking they're doing, right?
Yeah.
In terms of being willing to take risks. Imagine asking a technology-focused company to bring 120% collateral of what? Like,
Is it not a
What?
but I'm sorry, but
Yeah.
I'm sorry that I'm still defending the banks, but is it not a technology enabled company that just offed their business today?
I understand, but I don't know.
I mean, I guess it's
But-
that's how they price. That's how they structure their risk. I mean,
Yes,
by
like-
saying they are not taking any.
Yeah,
risk.
but it's almost like but you can also challenge them to be like, okay, you have a traditional way of assessing risk, great. Do some thinking and some banking work to really assess how you meet the needs of specific type of companies beyond what is already like set in the rule book
I agree.
and playing it safe.
Yeah,
I agree.
Because if you step away from even tech,
But they should not do it with my own money, Sha. Whatever they are doing right now is what they should continue. Please, treasury bills. Just do treasury bill. If you are one of Providos, Stanbic, Kuda, you three are my primary bankers. I beg you in the name of God, don't
I
get
think we'll start
creative.
looking into investing in agri.
I did send you. I did not send you.
Don't do anything
banking.
fancy with my money. Just put it inside where it's going to come out of.
No, but the thing is, like, jokes aside, if you look at the real sector, you look at hospitals, you look at, I don't know, pharmacies, these are real businesses doing real volume, but they still can't access loans from banks.
Actually, pharmacies, restaurants, hospitals are probably in a much better position to access bank financing.
They're in a better position, but they were still a big struggle.
If you are struggling as a pharmacy, and I say this as a former lender, yeah, there's a problem. Because for many of these SMEs, the real problem is that we don't have visibility into like your inventory, the movement of your inventory, and then your financials too are not like very pure. right? So it's either they're like directors, withdrawals, just like very strange stuff. But for businesses that like pharmacies in particular, and I'm hammering down on pharmacies and hospitals because like special consideration is even given to businesses like that. Like if you want to finance this new equipment for the hospital, like banks are all over that. The SMEs that typically can't access funding, there are two kinds. There's one that the Oga is an Oloiburuku, where it is more like character risk that the banks are running away from, or that the SME is not like well structured. Because even Stanbic had a credit product that it was sort of, it's between the RM and the credit guy that they agree, and the limit is like 10 million naira, and it just involves like a visit to your shop, see what's going on. Very simple. So if you can't access that type of facility, you are probably a much lower quality type of lender.
Do you think there's an opportunity for like banks to have products that help you structure yourself? So why I say help you structure yourself? On the consumer side, like the retail side in America, they have these credit cards called credit builder cards.
I know what you're saying.
Right? It's basically like a cashback credit card. And you use it to repaying that thing helps you build your credit score. And once you get a decent credit score, you can now get a proper credit card based on that credit score. So if you think of it from the SME perspective, if the problem is that they are very disorganized, is there an opportunity to have a product that helps them get themselves together so that they are ready for lending? Essentially, the banks are building their own funnel.
So it's an interesting question that you asked, because I was having a conversation with my founder and talking about things that smaller businesses, just by virtue of their size, that they don't have access to.
Casually dropped the hairs, left to heal.
Oh, people have known since now. I said it. But yeah, like this thing is something that is, I've seen it offered to like much larger businesses, especially when you go up that ladder, you go from like SME to big company to like corporate, where you're rolling with the blue chips. There was a company that, it's actually your former people, KB, that IB boys were trying to help them bring a lot of structure into the business, like a proper CFO, like operational processes. It's something that, as of today, I've seen it offered to like bigger businesses, but not smaller ones. But at the core, there is a force of will that I'm not sure that SMEs have, because many of these issues are behavioral issues. So record keeping, for example, you sell your goods, you get cash, it goes into your personal account. If I say, oh, go and register your business, have a business name, and then start, proper inventory management. For most people, just given the size of the business or the way that they operate, I'm not certain that is the sort of thing that they'll easily accept for a future promise of being able to access credit. Now, and don't forget that when it comes to credit, another problem is that there are non-credit alternatives for smaller businesses for raising capital. So for them, credit is not a do or die matter. They'll just go and do a job.
Especially because of the cost.
Yeah, especially because of the cost. So that's where I sort of hesitate, or that's where I'm sort of hesitating on this type of product, where it's great for them, but it's such a long-term play. It's like, in a sense, it's almost like insurance.
But then also, I think that it requires such a behavioral change.
Yeah. They just want to sell their market, get their cash. If they need money, they'll go to their union. They'll raise money from there, then pay you back in like super short cycle. Within 1 year, they've cycled out.
Yeah. But I think regardless, there's I mean, for the person who's willing to do the work, because there's a lot of work, there's really a market for people who are willing to do the work to understand deeply those SMEs and then tailor products to really meet the funding needs they have specifically, and something that really meets the needs for specifically Nigerian SMEs as opposed to just a textbook solution.
Yeah.
There's really a lot of, I'll say there's a huge opportunity there, but it's for the people willing to do the work. Because
you also now need boots on the ground.
Exactly.
You need RM to go and be meeting them. Have you recorded this week? Record.
I used to praise LSCTF. It's LSCTF for like being very hands-on.
Have you seen the
Laolu told me the MPL.
It's a social fund. They are not getting our money. It's fine. They are not getting our money back.
Because before I was like, why can't banks do this? Look how LCT is doing.
Yeah, those numbers are not great. Yeah, those numbers are not great. But that's the reality of the market that we are living, that we're operating in. Is why this private office, public, the people who go there are guys who know that, my business is solid. Yeah, they're
ready
guys.
to do things the right way.
Correct.
So
most people, and I can tell the white man that my app is the Starbucks for financial services. And wow, fun, great. Here's $10 million. Like, that pipeline is a bit easy compared to, like, I'm not saying fundraising is easy.
Wait, do you think guys don't go that route because it's hard?
I don't.
Or it's because of ignorance.
I think it's a bit of both. Again, I won't necessarily
qualify.
I won't necessarily call it ignorance, but I guess maybe it's lack of knowledge. But it's tough. It's tough because you have to, if you are not someone who is used to doing things in the quote unquote right or proper way, it's not an easy market to adapt to. Because then you weigh the cost and benefits, right? Why go through all of this when my guys are giving me equity USD offshore and I'm not as stressed to do that process? And you people are stressing me because I want to collect 3 or 5 billion compared to the tens of millions I've raised offshore with not as much stress.
But there's always the exchange rate risk.
Exactly, which is why, but I think now, particularly with how the country is and what has happened, where people are really just, and again, I think that CBN policy was really a big turning point as well, where people are actually looking very seriously as, okay, the benefits of doing that whole dance with your USD, the option just isn't there, right? So you really need to go deeper, build the relationships locally to figure out how you can consistent. Because the good thing with raising funds locally is once you consistently show ability and willingness to repay, like the referrals will come, the investors will be willing to up the size. So, the investors who in my previous job where we started out with just raising, and this was within the space of 6 to 7 months, maybe 200 million. And just from, managing the relationship well, paying on time, being very open with performance, talking through with them quarterly, within the space of 8 to 7 months, that 200 grew to like almost 2 billion. And so that's really the benefits of doing that, of doing the work to really build those relationships locally, because there's always good to be Naira because we operate in a Naira-based economy, right? So if you build that trust with the investors here, it's the benefits are really fantastic.
Fair enough. Any final words?
Personal introduction to family office, please.
That's actually funny. It's like, how do you even find a family office as a civilian?
I know that, is it KPNG?
You talk to KB.
One of them, they actually help set up family offices and help maybe it's the parents that made the money. They then help do tailored
come and use my 500k to set up family office.
Educated enough to handle family offices and build generational wealth and stuff like that.
500,000 naira, by the way.
500,000 naira for what?
Democratizing access to family office.
Scary.
That's a startup idea.
I hear you.
Anyway, thank you, KB. For people who are interested in knowing more about raising locally, send us a direct message and we can introduce you to KB for a fee.
A small fee.
A small fee.
And this episode was sponsored by Insert Your Company Name here.
Exactly.
They provide this so-and-so service to so-and-so people, and you can get started at www.insertyourwebsite here. This is how your
link Open Africa. That's the format.
Yeah, that's how it will sound.
Very straightforward.
Thank you.
You can sponsor a whole season. If you sponsor, we'll record more episodes.
Word. Goodbye.
That's so market.